On behalf of India FinTech Forum, I am Aditya, and today I have Mr. Rohan Kumar, the founder of Toffee Insurance. Toffee Insurance is a niche player in the emerging digital insurance space in India. Today, he has joined me to discuss about his new products as well as existing product and the recent changes in the pandemic him and his firm is facing. Welcome, Rohan.
Thanks, Aditya.
Yeah. So prior to your Toffee Insurance, you worked with companies like United Airlines, Shell. You were also the CEO of PlayUp Asia Pacific. So please tell us about your journey, motivation, and your vision behind Toffee Insurance.
Sure. Look, I started my career with, like most people do, finish sort of graduation and then try to figure out what stream of work they want to do. I tried to do sales and marketing to begin with back in 2000, joined United Airlines in sales capacity, managing a portfolio of their travel agents and clients in India. Very quickly sort of realized that I wanted to probably spend a little bit more time studying. So moved outside of the country to New Zealand to pursue my MBA. And then spent sort of the next 10 years in New Zealand post my post-graduation, worked across bunch of industries, companies like GameStop, which is one of the biggest consumer retail businesses, then Shell. So varied sort of work profile, but predominantly sort of in more product and sales capability. And then 2009, 2010 started to notice that there was a lot of action happening in India, primarily because of the Indian startup ecosystem starting to get a lot of action. A lot of funding was sort of coming through. The likes of Flipkart started to come into the news a lot more. So felt that needed to be back into homeland and not kind of, that sense of FOMO, not missing out on anything that's happening here. So decided to come back here. And luckily I found an Australian startup, which was wanting to build sort of the next Facebook for sport. And cricket was a sport that they wanted to start with. So they asked me to sort of go out and head that business in India.
Okay. So what is the new normal for you and your business in this post-COVID era?
I think look, there's a new normal for almost everybody, and whether you've been working in a corporate organization or in a startup, I think there are some sort of themes that have come out loud and clear. One is it has cut out a lot of the noise that usually exists in most organizations in terms of, we need to be doing X and we need to be doing Y, we need to be traveling to meetings, we need to be seeing people in person to conclude relationships. And a lot of that has changed. So I think fundamentally, what you now see is a new normal. And the new normal is that you've got to accept moving without that additional noise. And that means being okay on operating sort of completely remotely. I think one of the big ones has been organizations spending a lot of time on their employees, especially on their health and well-being, and really sort of taking a dipstick on the physical and emotional sort of challenges that it faces for most individuals, and how does that relate to productivity back in the organization. So I think in some capacity, it's been a great sort of neutralization of a lot of things which were accepted prior to COVID-19. And I think post COVID-19, people have genuinely become a lot more empathetic. They understand, when people say, look, I'm not okay, I feel sort of insecure. So I think people genuinely want to hear their employees. I think from an operational work perspective, it has, like I said, cut down a lot of noise, but it also cut down and allowed for leaders and operators to think about rationalization of resources. What's actually really needed to build a business versus what's on the periphery, right? And a lot of the stuff pre-COVID-19 was in the periphery, but you never really thought about it much because business was going on as usual, right? Now, when you have challenges come in your face, you really start to optimize for, what is it that you need to do to sustain a business over a long period of time. So I think fundamentally there has been sort of a few um, interesting changes that have become the new normal for most organizations, big or small.
So please tell our viewers about the product offerings of Toffee Insurance and their
Sure.
availabilities.
So Aditya, I mean, when we started Toffee about 3 years ago, our single goal or vision was to strive for creating accessibility, affordability, and relevance for insurance, right? I think, we came into this from an outsider's view, thinking that insurance needn't be this hard. It should be easy to understand insurance products. It should be sort of the state of affairs, which continues to be today in terms of, and if I look, before pre-COVID-19, and I say before pre-COVID-19 because, when you're in a pandemic, everyone rushes to go and make sure that they get an insurance. But prior to this, it's been a tough market. Most people don't recognize the importance of having a layer of protection for themselves, for their families. Is generally, and there are multiple factors for that. And again, I think we can spend days talking about what is it that makes it so hard for people to buy into insurance. But largely, it's driven, at least in the mass market sort of demographic, it's driven by the fact of there isn't enough liquidity, right? So if you're targeting a lower middle class group, uh, liquidity is a big problem when it comes to buying insurance. Second is awareness and education, and third is access in terms of do they understand, and when they do understand, do they know where to go and buy it, right? So I think it's sort of a few different sort of parameters which cause sort of everybody understands credit is easier because send your kids for education. So credit, insurance really needs to position it in a way where it is something which will serve you over a period of time, right? So, and we started with that sort of philosophy when we did Toffee. And fundamentally, the first thing that we wanted to solve was try and make simpler and easier products that most people could understand, right? So by doing that, we would make that entire journey of understanding financial products a lot more easier. So take the example of a dengue or a malaria insurance. Take the example of a cycle insurance, right? So in a lot of the products, we actually deconstructed these big lethargic products into multiple sort of feature sets. And this allowed for a couple of things to happen at the consumer front. One is it was easy to understand. So what does a malaria insurance do? Well, if you get malaria, it covers you. If you don't get malaria, it doesn't cover you, right? So it became a little bit easier to explain to consumers. And second, what it did was the price point actually became a lot more attractive for the consumer. So where you would buy a typical health insurance policy for 6,000, 7,000 rupees an annum, you could get a taste of insurance by paying 500, 600 rupees. And typically for conditions which you are a lot more worried about. So, most people, at least in India, and I may be wrong across the world, but that's sort of an assumption that most people think about what's going to happen now. So when you look at when you're in the monsoon season, people are scared about dengue or malaria.
Yeah.
Most people don't think about, hey, listen, I may be at a risk of getting cancer, right? So it's very difficult for them to get convinced about that, hey, listen, if your lifestyle continues to be the way it is, in 10 years' time, you may get cancer. And because you get cancer, you may need protection or liquidity, which is 10, 20 lakhs. So it's very difficult to sort of sell him something which he hasn't really thought about. Versus in the season, it's easy to explain to a customer, hey, monsoon season is in, high number of cases for malaria. You should, at the very least, if you don't have health insurance, buy a malaria insurance for you and your family. So again, not to digress from the question, but the idea of Toffee as it existed was to make accessible, affordable, and relevant products. And that's what we've done. We have a dozen plus products which cater to a wide variety of mass cases across health, life, and personal content.
Okay. Thank you. So, how has Toffee Insurance disrupted the claim settlement and fraud mitigation, especially using the new technologies?
I mean, Aditya, I wouldn't say disrupted. I mean, I find that terminology very sort of loosely used by for anything and everything. What we've been able to do is a couple of things. One is we've digitized the entire process. Now, because the products are simpler, we make sure that the customer is able to not have any physical sort of documentation that goes through. So, by the sheer nature of him being able to upload his Aadhar card, his PAN card, his medical documents, whether that's a report or the reimbursement expenses. So that entire process has been digitized and made very easy through both a native app as well as a progressive web app. What we've done, a couple of other interesting things is we have tied up with a facial recognition software company out of Israel. And what we do is, basis consent from the consumer, depending on the quantum of the claim. So let's say on a bicycle insurance, there was a claim for a cycle which is 60,000 rupees. What we actually get them to do is record a 1-minute narrative of the incident as to what happened. We then sort of run it through APIs, through this facial recognition software, which gives us alternate data. Now, this alternate data is not used to make a call to approve or reject, because as an intermediary or as an agent, we actually don't approve claims. We only pass that information to the insurance carrier. But that alternate data gives us a better sense in terms of the risk profile of that customer. So what we get is a certain cluster of consumers might be high-risk customers, certain customers would be low-risk customers. And that's a mix-up of using ground level data on the specific claim to income level data or financial data that comes through from civil. Of course, this is again taken by a consent from and given through us from the insurance partners. And then you use the alternate data from sort of facial recognition software. So you get a holistic view of that customer. And like I said, we don't approve or reject the claim basis that. We start to build models for what looks like high-risk clusters and low-risk clusters as we target new customers, in the future. So what would that mean is, from a year from now, and sort of we've been doing this for about 2 years now, is that we know exactly which geographies, which regions, which age groups are typically more fraudulent, so as to say, or high risk. And if we were to take a new product which was similar to a product that we've done before, we would either make sure that the premium of that product or the deductible on the product was suited better to the high risk sort of profile of a customer.
So, talking about new products, I would like to know what are the major metrics you use while venturing into new products.
So look, and this is an interesting question, right? And I think there is what we call as a push model and a pull model, right? Now, when I say a pull model, to some extent, traditional products, and thankfully because of the other insurance industry veterans and insurance companies and aggregators, some traditional products have almost become, I'd say, at least because of COVID-19 now, have become pull products. So insurance now is a pull product, and I don't see that changing for the next few years, right? People understand because of pandemics, the amount of money that they will have to sort of incur if they were hospitalized. And I think it is a good place for most people to sort of stay secure from a financial perspective. So in the pull product, I would say mortality, which is life insurance, health and hospitalization, which is your health insurance products. Auto insurance has always been a pull product because of it being mandated by the government. So these are, I'd say, more pull. And then any new category of product that you create for niche or mass market. So think, a cycle insurance product is a push product, right? You think a pet insurance product is a push product, right? Most people don't know what a pet insurance product is and what it covers and what it doesn't cover. So as you go on to building new products, which may fit very well in terms of the audience and the mass market that we have in this country, they still require a substantial amount of education and awareness that needs to happen at the ground level to understand the value of it. So when we look at building new products, we try and figure out, is there a good balance between a push and a pull product? right? We don't want to do a product just because it sounds nice and it's a niche category. At the end of the day, uh, you want to reach out to as many people and create sort of that safety net. We typically focus on a certain persona or a demographic, which is your lower middle income sort of group. So, Google calls it the next half billion, which is sort of mass market audience today, which is unprotected, uninsured, underinsured, is digitally very active, or is on the paths to become digitally very active. So access is easier. Affordability needs to be worked out in terms of how do you sort of construct these products. And relevance is one of the big ones, right? So it's like saying selling a life insurance product to someone in a fitness center. It's going to be extremely hard. Somebody who's healthy doesn't necessarily think that he should have life insurance, and that's the wrong point of sale for that product, right? So I think really sort of building thesis from what's happening in other markets, paying attention to the demographic, which is has certain pain points, and finding the right balance between a pull and a push construct, so that you're not out there spending a lot of time educating the consumer about the basics of a product, and so it should have the right balance there.
Okay. So you have worked yourself in the insurance space in India. So I would like to know your opinion about the emerging insurtech in India.
Look, it's leaps and bounds ahead of where it is when we started about 3 years ago. And I think um, the insurtech sector is a fairly young sort of industry, and I would say not more than 5 or 6 years. There have been sort of big drivers for change, including Policy Bazaar, which have been at it from 2010-11 onwards, and they have really sort of been driving sort of the insurtech ecosystem in the country. But I think we've seen a lot more of sort of the interesting constructs and plays happen over the last 2 or 3 years, both from the investor sort of ecosystem, as well as from a product ecosystem, right? And the opportunity really is so large because you have a subcontinent which is operating on single digit sort of penetration. You can actually go out and create multiple sort of product innovation angles, whether that be solving for the issuance and claims and servicing processes which help insurance companies do businesses better, whether you do it from a distribution perspective and how do you actually make a distribution workforce a lot more better. It could be from a product point of view when you go out and innovate on a new product and take that to market. So I think uh, it's still young, and I think it's exciting times for people who want to sort of take on big challenges and big problems, and I think insurance is one of those problems to solve for.
Okay. What are your future plans for Toffee Insurance now?
Look, for us, like I said, our emphasis continues to be on ensuring enough. We construct and put out enough products which help for creating a wider acceptance of insurance across the ecosystem. Our demographic is sort of that young, lower middle income group sort of consumer. So yeah, we are a product company. Our DNA is product. Me and my co-founder, we keep thinking on how do we sort of make insurance easier for the masses, and we will continue to sort of do that. And technology is sort of second nature for us in that sense that we started from a point of being completely digital. So when COVID-19 sort of hit, our business was not disrupted in that sense that we had almost operated from a digital sort of mechanism. So for us, the feet on street or offline operational model actually didn't exist. So it was easy for us to navigate. So our mission to sort of go out there and educate consumers on insurance via sort of a new innovative product, technology, and distribution model is what we sort of aim to continue doing.
So lastly, I would like to know that what what message would you give to other entrepreneurs in the fintech space or maybe something else during this pandemic?
I mean, look, I hate the idea of patronizing anyone and telling them what to do. I think there are smarter entrepreneurs out there than myself, and I think not so much as a message, but almost sort of as a thought or a comment. Look, I think personally, I have realized, going through sort of COVID-19 and this sort of last 3 or 4 or 6 month period is that you need to sort of go back to basics. You really need to start to go back into saying, what are the building blocks of the business? Things aren't going to change. This is the new normal. You have to find flexibility and adapt yourself for the way consumers are going to emotionally feel and behave for every purchase that they do. I think that's one. And the other one is, and I started the conversation with saying that is empathy for your employees. I think it's easier said than done. Building a workforce where you can understand and be adaptive of sort of the needs and requirements of your employees goes a long way. And I think if you have the right team which understands your path and your goal, and you are equally sort of flexible in the way they operate, then I think you've got a sort of a win-win situation all the way through. So my suggestion or my comment would be take a stock of where things are at, and be sort of compassionate about what's going on with your team or other businesses. We've noticed a lot of the partners are a lot of the other startup entrepreneurs and friends and sort of networks are not as lucky as some of us are. So making sure you're out there to give them a helping hand and whenever required and do what's needed. So yeah, that's sort of my advice for other entrepreneurs.
I think that's all we have for today. Thank you, Ron, for valuable insights on the new digital insurance tech as well as the product offerings of Toffee Insurance.
Pleasure. Thank you, Aditya. Lovely conversation. Thank you.
Yeah.